Okay, so today is Tuesday. It is December 28th. This is going to be a limited uh, coaching call, and then Thursday we're not going to have a coaching call. We go back to regular coaching calls next week after the New Year's holiday. So we'll be back to the Tuesday, Thursday, so you can get live help, live assistance, and then the regular updates 5 days a week, along with your weekend analysis. So that's a lot of opportunities to get a lot of trades. So let's go ahead and get through this and answer. First of all, I'm going to answer a couple of questions or a discussion that was actually brought up earlier today, and then answer a couple of questions. And then we're going to take a look at the charts and see if we can't find a little opportunity in here, or if there isn't, why wouldn't I consider the opportunity? So I want to show you more or less my mindset as to, and of course, this is just mine, and this is just my mindset. This is just what I see, and the trading system that I'm using. Everybody's going to use slightly different indicators, maybe different strategies that they used in the past, and that could all have some kind of an impact. Of course, there might be some scalping opportunities that you might want to trade. It's about sometimes pacing yourself. So these are just some ideas that I want to share with you. 22 years of trading. Many of you already know that I suffered a heart attack a little while back and had heart surgery, quadruple bypass. So it was a big one, and it was there was a lot of reflection that along with my doctors, that we went through, and my trading schedule. So just to give you an idea, when I started trading back in late 2000, 2001, I hit it hard every single day. I remember when I opened up my first Forex account, I started thinking that this is amazing. This was, back in 2000, late 2000 and 2001, and I was thinking this is amazing. I don't really care about sleep all that much. I'll just try and trade and look for opportunities. And at one point in the beginning of my trading career, and this is going to sound really silly for those of you who are experienced, I used to think that when I would look at a chart like this, if I was looking like, let's say, at a 30-minute chart, that there were going to be opportunities all the time, and that I was going to be in trades all the time. And when I realized shortly after that that that's not really possible, is sometimes you have to wait for choice setups, then the hard work came in. I had to face the reality that I was completely off on my thinking about what it was going to be like and what my life was going to be like, what work was going to be like every single day. The other issue was that if I was going to be staying up, as often as possible, putting in 18, 19, sometimes even 20 hours in a single day, and then doing that 3-4 times, or as often as possible throughout the week, at some point I was going to have to make it up. If I wasn't getting enough sleep, I was going to have to take care of myself with diet and everything else. So long story short, I did that for a long time. I did that all through 2005 when I started my managed fund. And I'm going to give you some ideas about some of the small short-term trades like the HL30 compared to some of the bigger trades. If you look at my website, when you joined, you see some of the screenshots of my trading account. There was one day where I made like $40,000, and it wasn't. It's a lot, but it wasn't. I had made more than that prior to that day in a single day, and I certainly make a lot more than that now because my accounts are much, much larger. But I do things in a different way, and I want to share with you these ideas so that on certain days or certain trading environments, you understand the idea of cutting back and letting the market work its way through the sideways choppy consolidation that isn't really providing too many opportunities, and you have to learn to let go. Nobody was there to tell me that. So when I was trading throughout 2000, all through 2000, then 2005, 2006 and 7, and then through the global financial meltdown, I was in my chat room 2007, calling out trades every single day, starting at midnight. I'm in California. I'm trying to sleep when the family's awake. It was really difficult. And I did this for years and years and years, for like 18, 19, 20 years. And I did it up until just recently. And I believe that a lot of it, sort of my doctors just attribute that a lot of that kind of behavior and the stress levels and how it affects the body to what happened to me with the heart attacks. I actually suffered several heart attacks before the final one that put me in the hospital, where they ended up doing this, performing the surgery on the same day. It was crazy, and I was fighting it the whole way. Fighting it for one reason, because I wanted to continue to trade. That's how passionate, that's how crazy I was about trading. I was willing to throw away a lot of things, including my health. It wasn't so much that I was trying to destroy myself. I just thought I had more time. I'm relatively young. I thought I had more time to be able to work on it a little bit later, but yet 1 year would turn into another. And the reason that I'm sharing this with you is that I want you to understand, and all this reflection since my surgery has been that I knew all along that there were times where I was trading in certain environments that weren't going to produce many opportunities. So I would force myself to sit at the charts or continue to watch the markets, which could cause burnout for a lot of people. For some reason, it didn't really cause me to burn out. It just affected my health. And then I believe, along with a few other things, ultimately led to a heart attack. I'm not saying it's going to happen to you. But again, what I'm trying to say is that with this holiday season, if we can see that price is likely to go sideways, and you hear me say this whenever we analyze at the end of the day, looking for HL30s, for example, if it looks like tomorrow, based on the closing prices and the daily time frames, if we look at the 5 p.m. rollover and we're sitting there looking at our charts, that's usually when I'll sit down and do my homework. And I'll look at other things. I also do scans and I look for charts. I look for stocks. I look for futures, certain patterns. If you go into the membership site, you're going to see that module where you can do scans with the stock charts. So I show you how to do that. And there's a code, there's different codes that you can set up so that you can look for different patterns. And the patterns that I'm sharing with you inside of the membership course are the patterns that we look for. Up thrusts that fail and print the possibility of a reversal where the upthrust would actually be a buying climax, and then we look for the automatic reaction, sometimes unusual amounts of volume, which you can see right here where I'm moving my cursor. So these are scans that you can use with your stock charts account, and you can look for stocks on, let's say, the daily time frame, weekly time frame, monthly. These provided great opportunities. So if you were with me last year or the year before, you know that we got into some trades, like even GM, that was a great trade. Netflix a while back, Facebook a while back, shorting them to really good opportunities and holding them for anywhere from a couple of days to a couple of weeks. The oil trade from October 2020 to October 2021, when it finally hit 85, which was our target. They were relatively easy, and that's the reason I'm sharing with you all of these ideas, is that I want you to, if right now you're in the frame of mind where you feel that fear of missing out, and you're always trying to hurry and scurry, you're looking through the charts, you're looking for patterns, you want to trade, you want to keep finding another opportunity, and you're not really taking the time to slow down and to accept the fact that maybe the market or the particular chart that or the instrument that you're trading may not be providing too many opportunities. If you can't slow down and you can't accept the possibility that maybe there's another market somewhere else that might be providing a better opportunity, you're going to miss them. And that's exactly what I was doing. I remained focused on a few markets, and all I wanted to do was just trade around the clock and trade for year after year. And I wasn't taking very many vacations. I wasn't taking very many breaks. I was missing all kinds of opportunities with the family. And this went on for like 20 plus years. And I knew all along that there were a lot of other opportunities. Of course, over the last few years, I've been getting into other areas and other markets. Crypto. I mean, I remember sitting at my desk in 2000, I think it was like 2009 or 2010, and I was looking for another way to accept payment on the website because some people were having difficulty with PayPal and things like that. And I remember reading about Bitcoin. Bitcoin had just recently come out. I bought Bitcoin back then, as weird as it sounds, and I held on to it, and I sold off a portion of it back in 2017 and 2018 when it ran up to just under 20,000. And then I was able to use the same strategies that I show you here in this trading course. I was able to trade it all the way up as it went in and ran into that just below that 20,000 level. And then I was able to short it on the way back down when everybody else was thinking it was just pullbacks through 2018, 19, and 20, when everybody was looking for the bounce for it to go back up to above like 50,000 to 100,000. So it's been relatively easy. I can get into other markets, but I missed a lot of opportunities to take advantage of bigger trades and in a much more reliable method by slowing things down and looking at the larger time frames. And you can do the same thing even if you have a relatively small account. And the way that I would suggest you do that, and I'm sharing this with you again because this is a conversation that I had with a coaching client today, and then another coaching client had asked me, like, what's your typical trading style now? Like, what are you doing? What are you looking for at the end of every day? When do you trade? So these were a couple of great questions that came out today with some coaching clients, and I want to share with you the answer to these questions, but my experiences. And again, I realize that my experience isn't going to be the same experience that you are probably going to go through. You're not going to have a heart attack. Hopefully not. You're not going to have to go through all that. But it doesn't even have to be that way where you're stressed out and you have that fear of missing out. And I want to walk you through how you can avoid that and other opportunities. So in 2022, there are going to be a lot more updates for you to get involved in other areas, other markets, slowly testing the waters. I'll give you an example. So I was also talking with one coaching client who's been using the Webull and Robinhood app, I forget which one, for a while now. And he started right around the pandemic. I believe right around the pandemic. He got some stimulus money, I think, and he invested in Moderna and a few other little things, and they kind of made him some money overnight. And then he, that wasn't working out. A lot of them started to collapse, and he was following examples and ideas from websites and people on forums and on Facebook. So he started losing the money that he was earning, and he didn't know how to trade. And then that's when the fear starts to set in. He realized that it was a good opportunity for him to make some extra money. This trading thing is the way he was looking at it, but he didn't have any formal education. And most people don't get formal education. What they do is they just kind of jump out and go out there on Facebook and watch a few people in some groups and maybe follow and join a YouTube channel. You got to remember, you're up against the best traders, and you're going to lose your money if you don't. I don't mean to be, directing anybody in any particular direction. You may have your own opinions about it, and they may be working out. That's fine. But from what I see with every coaching client that I've ever worked with since 2007, you have to put in the time and perhaps some money to getting a formal education in the markets. And you really need to understand the real mechanics, that price movement mechanism that I talk about, which is really like that Wyckoff, that Wyckoff principle, the price structure. So it's important that you have this as a base and then move on. But a lot of people do it the opposite direction, right? They'll jump into Bitcoin or jump into a few stocks, and then it makes money, and they go, "Wow, I don't even know what I did, but it worked." So I can see that it's a possibility to make some money. And then all of a sudden, the market teaches you a lesson when it takes it back, and you realize, I have no idea what I'm doing. You know what I mean? You feel that way. So I don't want you to feel that way. I want you to slowly move into these other opportunities. So for example, the oil trade from October 2020 to October 2021, these were great trades. And a lot of the coaching clients that took those trades, they put on quite a bit of money on those trades and let it run for an entire year. And they didn't have to worry about it. And there was very little drawdown. As a matter of fact, I'll try to pull up the chart here and show you the oil chart. But it's just like one trade after another, after another, after another like that I find them all the time. And a lot of times I can find them with the scanning tool with stock charts. And then sometimes just by simply following certain markets and using the same lessons that you're learning in the online trading course in Module 1, that phase analysis, understanding the wave counting method and identifying phase A, B, C, and D. And the reason we do that is we're tracking the smart money on the larger time frames. I mean, some people will argue, well, if you're trading off of a 5-minute bar chart and you think you're looking at smart money, you're mistaken. You hear people say that sometimes. But it's the same basic setup is what we're looking at. When it comes to larger time frames, obviously there's going to be more activity when there's more volume. Somebody's putting on big size and big position in those trades, and that's what we're looking for when we get these opportunities to take these trades where they're very stress-free, I would say. Really simple, really easy. You come back at the end of each day and kind of look at the setups to make sure that everything's intact. But I'm there to help you. I'm there to inform you that it's a trade that I'm actually going to be taking for myself and for my investors. Some of my coaching clients are going to be taking them. I can't say that all the coaching clients are going to be doing it because everybody does something a little bit different. But for the most part, it's all information and opportunities that are available to you. And this is going to go on for as long as you want it to, as long as you want to continue to receive these updates and these trade ideas. So I'll show you the oil chart here in just a moment. But this is a 30-minute chart. And the reason that I started here on a 30-minute chart is that First of all, this is the euro, and you can see that it's in a relatively tight range of consolidation, and we can only get so much data on this chart. If I was to tighten it up, we might get a little bit more. And then I'm going to go to a 1 hour chart, and you can see, if you've been trading with me for a couple of weeks now, or even a couple of months, you can see that this actually started way back here when I was talking about it. This was the end of November. Yeah, the end of November. This was November 30th right here. And you can see the activity. You know, when we talk about change of character or unusual behavior or activity on certain price swings or bars, this is what I'm looking for. You can see that, again, this is a 1 hour time frame. And you can see this one bar right here creates all of the consolidation that we've been trading in for the last few weeks. This is November 30th. And when you see unusual activity like this, and then a particular currency or a particular stock or Bitcoin starts to move, or any crypto starts to move sideways like this, you can't continue to sit day after day. I mean, you can. I did it. That's what led to all of these changes in my life more recently. And not even dramatic changes as far as trading. I knew this and I was already applying it. But things are very different now. And I want you to do the same. I want you to have a very relaxed sense of confidence when you get into these trades, because I'm doing the same thing with you. I'm going to teach you how to do this. But I want to remind you of the mistakes that I made and how I avoided doing what I should have been doing for about 20, 21 years. And it led, I believe, to a lot of problems in my life. I was a little distant with some of my family, and I wish I would not have been. And all of this to make lots of money for my investors and my trading account. And I kept thinking I had more time. So when I go to, this particular candle, that's like a really unusual candle, right? I mean, we see one solid 1 hour candle. That's pretty interesting for a small time frame like this, a 1 hour chart. I mean, it's not unlikely, but it does draw attention, right? And then you can see all of the volume here, exactly what it's doing. It was actually negative or bearish volume, a total sell-off, something happening here. So now I'm going to tighten up the charts, and we're going to take a look at where we are right now. And you can see that, again, all of the activity since the end of November has been taking place inside of this range right here. Something happened within that 1 hour. So for me to try and look for opportunities, let's say price is over here a few days later, or maybe even a few weeks later, in the middle of this range, and I'm thinking I'm going to find some really choice opportunities or breakouts and things like that, it's kind of delusional in a way, if you know what I mean. I'm more, if I'm thinking that way, I'm more expecting or thinking that I'm going to miss out on a trade opportunity or a breakout, rather than looking for the signs and the clues that this is actually going to give me a really good breakout. It's not possible. So when we follow the Wyckoff structure, the phase analysis, right? We have a buying climax, and then we have an immediate sell-off, and then we got the automatic reaction. This sort of solidifies this range of consolidation. We know that price is going to spike up a little bit higher, sometimes a little bit lower than this initial support low or this resistance point. And the key to understanding this is that when we follow the Wyckoff principles and we're looking for specific opportunities to get into the trade where it's better than other places where we get signals, and I'll explain here in just a moment what I mean. When we're looking for better places to get in as opposed to other places that could be a little more choppy, we have to understand that that opportunity isn't going to be created quickly. Not usually. It's going to take some time if what we understand about the behavior of smart money and how they acquire at the lows instead of the highs or in the middle of ranges. Very often I tell myself, when I see price and I have a clearly defined high and low with that buying climax or selling climax and then the automatic reaction, if I see price in the middle of this range, I immediately tell myself the uninformed retail trader who's looking for 618 bounces and little trend line breaks and is scalping all day long and is trading like their hair's on fire. That's how I used to describe it years ago, because that's how I was trading. Those are the people who are going to win some, lose some, win some, lose some, win some, lose some. And we don't trade like that. I used to trade like that. And I know that some of you might still possibly trade like that. And I don't want you to do that anymore. There's no reason to do that. That by itself is stressful. My mentality changed, and I started thinking a long, long time ago, I only want to find the picture perfect choice trade opportunities to get in so that I get a winning trade almost every single time. I know that I'm going to experience a loss every once in a while. But if I can change my thinking and learn how price moves the way it does, why it does, all of those things, if I can learn that and get really good at reading a chart and using volume and identifying when price is really, really going to break out or experience a big move, instead of trying to trade overnight because I think I'm amazing, or Forex is amazing because it's trading 24 hours a day. I mean, these are the things I used to think. I used to think, wow, I'm making so much money. And then all of a sudden I would get hit with a hard one, right? It was just a really bad trade. It was hard going the opposite direction. You don't want to let go of it. You don't understand all of these things. I mean, there was so much going on in my mind in the first year of my trading career, and so many learning lessons there. So the only way to get as close as possible to making 100% or getting 100% picture perfect trade opportunities and winning trades is controlling your behavior and learning this method so that you stay away from the more risky, choppy action, price action, and behavior, and accept the fact that in order for it to develop a signal that you can trade that's reliable, it's going to take some time. It's that building a cause that Wyckoff talks about. If smart money, big banks, institutions, investors with a lot of money that are trading and understand these concepts, whoever, the bigger smart money players, if they're going to get into a trade like this, let's say it's a daily time frame, they're going to wait for price to move and behave and try to move it in a certain way so that they can acquire and get into a position at a much better, lower price, rather than getting in on the highs or getting in the middle where you're not too sure which direction it's going to go in. Let all of the little people, I would refer to it, the little guys who don't understand these concepts, the guys who are afraid of missing out on a trade, the guys like me in the beginning of my trading career, when you see a bullish engulfing candle at a 618 retracement right after something like this, and you're thinking, oh, it's going to take out the highs and it's going to rally, and I'm going to miss it if I don't get in right now. And what does it do? It moves up just a little bit more and then rolls right back over and tests. Well, if you understand Wyckoff and the principles, then you know what these tests are for, and you expect them, and you wait for them, and you watch for them, and then you do your homework, right? You analyze phase A, phase B, phase C. You look for your spring. Sometimes the spring shows up, sometimes it doesn't. It resembles something that's very close to a spring. And then the bounce, and then the move back up. You're watching volume levels pick up maybe a little bit more on the right-hand side of the range of consolidation as opposed to the left side. All those little details that we look for and that you're going to learn in Module 1 in my trading course. Review those videos over and over and over again, because all of that information is there, and you can print off all of those sample worksheets and the sample examples of stocks that you can clearly see the schematics of the accumulation or distribution phase. All of that's important, and it all leads up to a choice opportunity to trade with the smart money. They're not doing what all of these guys who are... One interesting thing that I realized years ago, and this is just to give you an idea, every once in a while I will put the Fibonacci tool on a chart just to get a sense of the amount of retracement, so in my mind I can understand how deep the pullback was, or whatever it is, right? But I'm not using that as a trade strategy on its own. And one of the interesting things is I never hear anybody, I've never heard anybody who who trades and for a private fund, who has investors, who's been trading for 30 or 40 years. I've never heard anybody talk about using the Fibonacci tool, especially in Wyckoff circles and Wyckoff groups. And I've been taught by a lot of the, one of them just recently, actually two of my mentors passed away in the last few years, one of them just last year. And they taught me Wyckoff as well. I was learning it on my own in the beginning, and then I went out and searched for these individuals to teach me more so that I can get more insight and more value out of what it was that I was doing with Wyckoff and all of these methods that I'm teaching you. And they never talk about, it was so interesting, because then you go into these other groups like on YouTube or Facebook, And all of these little inexperienced gurus will talk about 618, golden ratio, golden levels, whatever it is that they call it. Trend line, little trend line breaks. They'll draw little trend lines right in here. And then if it reverses, it'll go up for a few pips. And they think, perfect trade. Even if it works sometimes, to me, they're hacks. They're just little tricks. But they work if you're going to use the Fibonacci tool, or if you're going to use a trend line break. They work much better if you understand this behavior and you're looking for areas where the smart money is likely to jump in and move, which requires some education, right? You're going to have to dedicate your time to learning this. And then you learn when to get in, which would be phase C, D, right? As it starts to break out and make its move. And then, of course, phase E would be the breakout and the continued direction, whatever, if it's going to the upside or to the downside. But those little 618 retracements or little trend line breaks and little tricks like that you see on YouTube, those work much better if they're done at a better, safer location, especially if you incorporate Wyckoff principles. You try to do it in the middle of the consolidation ranges and you're going to get stopped out. Sometimes you're going to win, sometimes you're not. Sometimes they're going to look like bullish engulfing candles or evening stars. Again, you're missing a big picture if that's all that you're using to analyze the chart. Your ability to get into a better trade and to make more money, where from the time you get into the trade you experience less of a drawdown and more of profitability as it's moving, is when you trade with the smart money. And you have to study that. Then start applying your 618 retracements and then maybe your trend line breaks on the larger time frame and things like that. And you'll notice that things are going to work a lot better. An evening star, after I've identified phase A, B, C, and D at support, an evening star pattern on a daily time frame with counting the waves with the volume as it moves into that support and then does the test, is going to be a lot better than me trading it over here inside a consolidation in the middle of this range. Now, the other reason why I brought up this chart is that I want you to know it's the holidays right now, right? And I've been saying quite a bit, quite often, that for the last few days, I might not trade the euro dollar because of this consolidation. To me, it's just not ready. At some point, I'm willing to stop looking at this, because if I get an HL30, it might hit that first 20 pip target and it might not. Sometimes the tighter the range gets, the longer it stays inside a consolidation like this, especially when you can clearly see it. I mean, something was really happening, right? We know this is pretty dramatic. And then, of course, taking into consideration the holidays, there's no point in me continuing to look at this one. So I stopped looking at it, even if a couple of trades are setting up and they hit their targets. I'll wait until next week when things return to a more normal level and I look at the daily time frames, and I'm just giving you an example. But before, I wouldn't do that. Before, years ago, and maybe even up to just a few years ago, I would continue to look for opportunities. I'm not saying I would necessarily trade inside of this sloppy consolidation, because it is inside of and between these two support and resistance levels. So I still wouldn't trade it anyway, unless it was for a really good, strong, obvious reason, something really set up, which could happen, but not likely. But before, I would be thinking, no, I need to be sitting here. This is like maybe 2000 and 2001 and 2002. I need to be looking overnight. I got to wake up at midnight and I got to sit there and stare at the charts for 10, 15, 20 hours. There's no reason for me to do that. I can slow down, stop looking at this pair altogether, look for another pair or another area, another market, maybe crypto, maybe a stock or something to that effect, or just accept the fact that what if most of the markets are pretty muted as far as the amount of range and activity, and it's just going to provide limited opportunities anyway. And in that case, I might as well take a couple of days off, just watch the charts, identify key levels of resistance and support in different markets on different charts, and then just wait until it's all over with. Wait until everybody comes back to work, all traders are back at full force, and then we can start trading more activity. Now be careful on Monday, right? The first trading day of the year. Sometimes that can be pretty volatile. We know that too. And if you don't have any experience with that, keep that in mind. So hopefully this will give you an idea. Take and learn your lessons from my mistakes, seriously, when it comes to that sense of missing out on a trade opportunity. Chances are you're not, if you understand what's going on. If you do not understand it, and you don't have anybody to teach it to you or share it to you or explain it to you, then you're probably going to feel that way, because that's what I went through. Nobody was really there to tell me I just kept trying. I mean, I remember even Thanksgiving the first year. I just sat there the whole time, and I kept thinking, well, Forex is still open, even though nobody's necessarily doing anything here in the United States. So I'm going to keep on looking. And I just sat there, and I just sat there, and my family was like, "Oh, are you going to come to the table?" And I kept saying, "No, well, I got to keep an eye on the charts." And it was so silly when I look back at it, but we all do it, and it's okay, the passion, but I want you to understand why it's happening, what we're looking for, and that you can look at the market at a much deeper level, be a big trader, think like a big trader, think like the big smart money traders. That's what I want you to think like. Don't play around with this choppy trading environment unless you've got a great scalping system. I don't know, you might have it. I had developed a few little scalping systems, but it was exhausting. And at the end of the week, sometimes I was profitable and sometimes I wasn't. So I gave that up. It was just a joke. And then I had brokers that were always messing around with me. I remember back when I opened up my first couple of brokerage trading accounts with FX, and this was back in 2000 and 2001, and they weren't necessarily letting me scalp. They would stop me if I started scalping. It was weird. I would place an order and it just wouldn't even fill. And then I would call the trade desk. This is back when they would always pick up the phone. And I would argue with them, and they would go, "Oh, well, we're not doing anything on our end." And I'd say, "You guys are going to let me scalp, right?" And they would say, "Oh, yeah, yeah." And then some of them would say, "No, we don't allow that anymore." It was just a joke. It was just a mess. There's no reason to go through that. It's exhausting. It can add more stress. When you add more stress, you're more likely to make more mistakes. When you make more mistakes, you're more likely to lose more money. And you don't need to do that. You don't have to do that. Again, my attitude is that I want to win on every single one of my trades. The only way that I can make that happen, and again, I do admit that I'm going to have a failed trade, but it's my attitude. And my attitude requires control, my behavior, which means I also have to learn. I have to learn, I have to study, and I have to understand these concepts. And then once I understand them and learn them, I have to drill on my behavior so that I don't make any mistakes and I don't leave any of the components out. It's easy once you learn a trading strategy, right? You get it down and then you're still making mistakes the following day. Well, that's normal. It's like learning how to play football, sports, boxing, fighting, going to work, learning a craft or a skill or becoming a carpenter or whatever. You're getting the hang of it every day that you show up and every day that you do it. Every mistake teaches you another lesson, and you keep getting better and better and better at it. And that's exactly what we're doing here. We're trying to shortcut, right? And we're trying to get you to the front of the line as quick as possible. I'm going to share as much information as you're willing to accept from me. And one of the best ways, of course, is to teach you through stories. I'm sorry that, it might sound kind of dramatic talking about heart attacks and heart surgery and things like that. I wish it wasn't necessary for me to have to talk about it like that. But that's what happened to me. It's not necessary for you to have to put your family through a lot of stress with your trading because it can affect them in one way or the other. And it's really not necessary if you understand these principles. One other thing, though, that I want to remind you is to keep in mind that we don't want to be trading in the middle of obvious ranges of consolidation, even though it might look really exciting when you see a bullish engulfing candle at a 618 bounce. If you're thinking like the smart money trader, you realize that this consolidation after a dramatic move like this, if it's at a high or a low, it's going to take some time for it to fill out and start moving sideways. How much time? Well, I mean, if you're looking at a 5-minute chart and it's going to last 2 weeks, that's going to be a long time, right? Slow things down. Go to a 1 hour, go to a 4 hour, go to a daily. You'll see it. It'll look really obvious. And then realize that understanding, again, the high and the low, the selling climax, buying climax, whatever it is, automatic reaction, analyzing the phases of consolidation, determine if it's accumulation or distribution. Are you at a top or are you at a bottom? Watch the patterns and counting the waves and watch the volume levels. All of this is a signal and a clue. It's a footprint, and you can clearly see it when it's getting ready to make its move. These were little short-term opportunities over the past couple of weeks, but very, very short-term, limited opportunities, and they provided themselves at a time when there was a lot more volume. You can clearly see it here with just the volume levels as opposed to what we're looking at over here over the last couple of days as we got closer to Christmas and Christmas Eve. Or I should say Christmas Eve, and then things just slowed down and stopped, and now I'm not doing anything here. So this one, euro dollar, just to let you know, as far as the HL30, even if the HL30 works tomorrow, on Wednesday, the 29th, I may not even care. I might watch it, and sometimes I'll do that after some kind of lengthy period of consolidation or confusion, and there isn't any clear direction, even on a larger time frame. I will watch the way I normally watch. I don't have to sit and watch hour after hour, working around the clock where I'm exhausted and I'm only, getting 4 hours of sleep. I don't want to do that anymore. I don't want anybody to do that. You don't need to do that. I'm here to say that you don't need to do that to make a lot of money. You can grow your account and compound your account doing it the way we're doing it. We're looking for a lot of other little opportunities you're going to be able to get in and out of comfortably in other markets. I'm going to teach you the structure so that you can look at any chart and look for the same opportunities. And then when I give you these tips through the Slack channel, you'll be able to decide on your own if your broker allows you, or if you've got, let's say, the app and you can just put a few dollars into a little trade to test it out to see how it goes. But you're not going to be misinformed and you're not going to be in the dark because, again, you're going to be able to analyze with me the setup, the actual setup that gave us the opportunity regardless of what we're trading. That's the beauty of all of this. And you're going to get more opportunities. And it's going to be fun. That's the other thing. You don't need to know every piece of economic data to be able to trade Forex. You don't. I thought I did, and I studied it all in the beginning, and I kept going like a madman. I had these 3-ring binders for each currency pair that I traded, the euro, the pound, the dollar, and the yen. And every single report that came out, every single day, I was religious. I was disciplined by it, the entire process, and I made my own graph charts with the accounting every single month that these reports were released. And I was able to track my own results with the numbers that I received each time I traded those economic reports. But they didn't all produce opportunities for me. And then once I understood the Wyckoff price structure, analyzing phases of consolidation, volume, the way it all incorporates, the fact that it's going to take some time for smart money to acquire or to distribute at key levels, and for all of this to provide the one perfect opportunity or 2 or 3 perfect opportunities to get into a trade. When I learned all of that, I realized that it's just a matter of watching how the market reacts to economic data was really more important than the numbers themselves. To understand what the report is and how the impact it has is great, and you need that. But to make a decision, again, I needed to see how the market actually reacted to it. Very often you'll see a report come out, you're prepared for it, and price still doesn't do what you think it should do, even though the numbers say whatever it says. The market still reacts in the opposite direction. You don't want to get caught off guard with that. The other question was what is my trading day like? Am I trading the London breakout strategy? Occasionally I will trade the London breakout strategy. Being a Forex trader, and like a lot of you possibly, I have sleep issues. So sometimes I'm going to wake up anyway if I go to sleep at 8, 9 o'clock at night, my time. Maybe I'll wake up at midnight and, for whatever reason, and my charts are on in my office, and I'll be able to look to see if there's a little perfect opportunity with the Good Morning London breakout strategy. And the other thing is that, remember, we do our homework the night before to assess the conditions on the pound to see if it's a valid idea to even be looking for breakouts at the London Open on the pound dollar. Because there are some days where we probably shouldn't trade it because it's likely to produce whipsaws, that head fake move where it goes up and down after that first 30-minute bar. And then you're just going to get stopped out 2 times if you try to execute the trade 2 times. So you want to avoid those. So again, understanding the environment is important. So at this point right now, with the recovery from the heart surgery, I'm not looking at executing too many of them. Again, occasionally I will trade it if I'm awake and I see the opportunity. But I'm not looking to do that right now. It's not necessary. And the same thing with the HL30. So the HL30 is a much better opportunity for me because I set up my charts right at the 5 o'clock rollover. The 5 o'clock rollover is 5 p.m. Eastern time or New York time. Well, that happens to be 2 o'clock in the afternoon for me. The sun's still up, still daylight. I'm still spending time with family. It's an hour or 2 after lunch, so there's no reason why I can't sit down at my charts at 2 o'clock in the afternoon and set up my charts. So I'll look at the 30-minute chart on the 4 majors, looking for a possible HL30. But again, I need to look at that daily time frame to assess the conditions. The daily time frame and just the very obvious fact that here on the euro dollar we're still moving sideways since November 30th. Maybe I don't want to even bother with an HL30 here, so I wouldn't even mess around with it. But the HL30 sometimes will set up the actual entry for me before I even go to bed, sometimes before 9 or 10 o'clock at night, my time. I get the HL30 signal and it's confirmed when it's a good valid trade, and then I can set it and then go to sleep if I'm going to be using one lot and one target, one stop, the 20 pip target, and I can go to sleep. And I consider, and this is important, I want you to understand, I consider trading the HL30 as a quick, easy opportunity to make a little bit of money. Even though I might put on, a big size or a big position, or you might put a standard lot or 2 or 3 or even 5 standard lots if you want, and it's hitting a 20 pip target. That's $200 on a standard lot. So if you're doing 5, you're making about $1,000 on that trade. It's pretty easy. Like $1,000, if you have the capital, if you can get to that point and you can execute 5 standard lots or something to that effect, the equivalent of, and it hits 20 pips, you're making about $1,000. And then you're asleep, for the most part. If it sets up before 9 or 10 o'clock before I go to bed, I wake up at 4 or 5 in the morning, and the trade's already closed out and the money's sitting there. I look at those opportunities as like an opportunity to pick up $20 on the side of the road. You see a $20 bill in the parking lot after you get out of the grocery store, and you go, "Whoa, this was cool," and you're gonna pick it up. And that's how I look at the HL30s. And I don't mean any disrespect, because I have told you, many of you, you've heard me say that a lot of my coaching clients exclusively use the HL30 and they make a full-time living from it. Nothing wrong with that, because that's all they do and they repeat over and over again. But there are also other opportunities. And if you go into the coaching modules, the live coaching calls, for example, you're going to see trades that we execute on, let's say the pound dollar, that pay 180 pips in a single day. Sometimes it'll pay 180 pips, 200 pips, 90 pips, 70 pips, all within 4, 5, 6, 7 hours within a trading session. Those are the much bigger trades. Now imagine putting 5 lots or even 1 standard lot on a 70 pip trade. Now you're making, $700. If you're trading 5 lots, you get my point. 180 pips, you're making $1,800 on a trade with a 1 standard lot. Things like that. I mean, these are they're different opportunities to make much more money in a situation like that. But those don't happen every day. The HL30s happen more often and almost every day during ideal conditions. Remember what I'm saying, during ideal conditions. There are certain trading environments and conditions when the HL30 is just kind of worthless. It's just not going to really provide many opportunities. And that is what is critical for us to understand when to stay away from it. It's the same thing as understanding Wyckoff. If we understand Wyckoff, we understand the buying climax, the automatic reaction, and we understand phase B when it gets sideways and choppy and consolidated, and we stay away from it. We don't trade during that environment. And then we look for the spring, we look for C, we look for D. That's when we start getting into the trade. So it's the same thing as the HL30 in that sense, that you're looking for the ideal conditions. Same thing. It's basically the same concept. So the same thing with Wyckoff. We're not trading immediately after a move like this, and we're not trading during phase B. It's important that we identify phase C and then D to get into much better trades, because that's when the smart money is starting to really accelerate their activity, and they're going to be doing all of the heavy lifting, and we just trade alongside them. And that's when we can pick up 180 pips on a trade on the pound dollar in a single day. That's when we can pick up a trade on the oil chart. Let me go to the oil chart. As a matter of fact, I'm recording this, so I'm going to take off this pause here. Okay, so this should be showing, you should be able to see the oil. So let me go back over here. Here's the buying climax. This goes through August, February, March. This is a monthly time frame, by the way. And then that peak right there is July 2008. And then it drops right back down and we get that automatic reaction. This is the same thing that you learn, Wyckoff principles, the same thing that you're learning in Module 1. And then we're analyzing the phases of consolidation. Here's phase B. We get a little dip down here. Here's the spring. This is phase C. And then we get the test. Let me open this up for you. And notice the amount of volume that starts to come back in here on the right side of the chart of this area of accumulation, if that's in fact what we're seeing. Now, this may never even take out the high. It's possible that it'll never go back up to 147. That's a possibility. But we're treating it as such with this opportunity on the monthly time frame to trade along with smart money. Obviously, that low right there, let me get you that low right there. That was the March low 2020. where we saw it go into negative territory, which was really weird in itself. But notice the amount of volume. I mean, these are all of the things that you're going to learn in Module 1. The amount of volume, the signature, the footprint, the smart money, the way they're acquiring down here at the lows. They're not doing it in here inside of the middle of consolidation. They're not doing it over here where it reaches a little top. There might be somebody buying, of course. But again, smart money knows that this is going to take some time to fill out. And they're going to do most of their work and the heavy lifting at specific levels. That's what we're looking for. So again, you're going to get into the trade at specific levels. You're not going to always be in trades. And the same thing even with the HL30 on a 30-minute time frame. Remember that. You're not always going to take every HL30. It's kind of silly to think that way. We're looking to trade like smart money traders. That's what you want to think like. So let me open this up and I'll walk you through the setup. So here's the clear spring reversal. Remember, evening stars, morning stars. I talk about 618 bounces, candlestick patterns. They're much more effective if you trade it using Wyckoff principles and understanding the spring. I used to trade candlestick patterns inside a consolidation like this, and it would go nowhere for a long time, and then I'd get stopped out, and I would wonder, why isn't it working? Why isn't it working? Well, because I didn't understand when I first started trading Wyckoff principles, smart money principles, and behavior. Once I understood that, and then I used my candlestick patterns, then it made a big difference. And I was able to get into trades like this, where I experienced very little drawdown while I was in the trade. And for the most part, while I was in the trade, I was in profitability until it hit its targets. So you can see here, this was October, November 2020. And here it topped out and hit our target at 85. And that was October 2021. So it took about a year, approximately. And it was very easy to do. And a lot of the coaching clients were able to execute this trade and hold on to it just like this. It was very, very smooth, very easy, easy opportunity. Of course, I did go a little further. And the analysis initially with this setup was also with point and figure. So when you're ready, this can be done without point and figure. But when you're ready, point and figure actually gives me the count. Very often with a move like this, maybe somebody would probably draw the Fibonacci tool with the low of the spring to that high and then the little pullback right there, and then try to look for extension targets. I would have done that before I understood point and figure. Now point and figure, I look at something like this. I do all the work here on the bar chart or the candlestick chart first, and then when I identify the pattern and the opportunity, and I can see where smart money is starting to build up more of their position, which is, again, all of this is building a cause, right? Building a cause. Let's just imagine that this was going to break out and keep going higher. I don't necessarily think it's going to, and I'm not saying that it will. If this was a stock, we've got, I'll show you a couple other examples in another video where we've got some of these positions that are going to continue for a while. I don't want you to chase the trades. Please don't do that. Just use it as a learning tool, and I'll remind you again. But some of them we're expecting to really break out. But again, point and figure, I immediately can identify the same pattern here with point and figure, and then the count that I have with point and figure from the left to the right, that automatic reaction all the way over to the breakout and then the move, the spring, all of that gives me a specific number because of the count with the X's and 0 columns, and I've got a precise target. That's what led to the 85 target here. Again, if this is going to continue further, we do have a second target. I don't want to post that here because I don't want anybody chasing it or saying that they saw my video. I can't stand when that happens. And I don't want anybody getting burned or hurt, especially if you're watching this, and you're not in the coaching group because you're not going to get the updates. But it really is relatively this easy. And I'm going to, in 2022, put you in some of these trade opportunities that are on the larger time frame. And what you can do, if your broker doesn't allow you to trade, let's say off of your, MetaTrader platform, you can't trade oil. You may be able to go to like the Robinhood or the Webull or some kind of other app, open up a small account with $50, $100, $150, and put a small portion of money on the trade and see how it works for you. Because in the very near future, when you understand all of these principles and you've been trading with me long enough and I give you these updates and these trade ideas, you're going to start putting more money on the trade much more confidently, and you're going to make a lot more money on the trades. So anyway, I'll leave it here. So to recap, again, think about your mindset, your mentality. Take care of yourself. Try to eliminate the ideas and the thoughts, if you're having them, about the fear of missing out. You want to start switching that fear of missing out with your mindset as if you're the smart money trader. So when you sit back and you look at the charts, you're going to go through the different time frames to analyze the phases of consolidation like you learn in Module 1. If you're not in the trading group, go to 10xfx.co, join the group. You can pay monthly and just use the service monthly for as long as you want. No long-term commitments. Get in there in Module 1 and watch those videos over and over and over again. And you'll start seeing the patterns. Print out some of the worksheets and some of the schematics. Look at them, keep them by the desk or on in a notebook, plastic sheet protector, something like that. And then look for the same patterns and think like a smart money trader. That you're looking for these choice opportunities if you're going to get into a trade. And just, the same, if it was an area of distribution, you're looking for opportunities to sell it. And you're going to start thinking about waiting, right? Patiently waiting for a better opportunity so that when you get into a trade, they start looking like this. You know how I hear it all the time, because I used to say the same thing. Whenever I get into a trade, this is what I would say in my first year of trading. I would say, whenever I get into a trade, it immediately goes against me and I get stopped out. Your timing was wrong. I didn't understand this. If it's happening to you now, your timing's wrong, and you just need to study this a little harder, or begin to learn it. And it's not that difficult. What makes it difficult is to think that you're going to watch a video and look at a schematic chart once, and then you're going to be able to identify it. It didn't work like that for me. I had to study it over and over again, and I needed to keep looking at chart after chart after chart after chart, and drawing my lines, looking at phase A, phase B, studying, watching volume. Analyzing what I learned in those videos in Module 1, looking for these opportunities over and over and over again, and you just get better and better and better and better at it. And you're going to be blown away at your ability, if you stick with this, to be able to do this on any single chart, in any market, anywhere, all the time. Like, it doesn't matter what somebody throws at you, a stock, crypto, commodity, it doesn't matter. You're going to be able to do this all of the time. It is amazing. And it's a wonderful sense of fulfillment and comfort and confidence when you get into the trades. Most of your trades, if you do it correctly, just like this, and you understand these concepts, are going to work out like this. And I say this almost all the time, especially if you watch the live coaching call videos, where we actually had live trades that are very similar to this, not necessarily oil. Some of them are going to be crypto, some are going to be Forex, and they're trades that work out. And you'll hear me say very often in almost every one of those videos, from the point in time we get into the trade, we're almost always in profitability and we just let it go. That is much better than being the trader who is afraid of missing out, doesn't understand these concepts, and then says and feels that every time he gets into a trade or she gets into a trade, they feel like it's going to go against them and they get stopped out. You don't want to be that guy. That's not a smart trader. That's not a smart money trader. Think in terms of the smart money. Be a smart money trader now. Even if you're trading a $50 account, start looking at the charts like a smart money trader and trade with them. And your account's going to grow much faster and you're going to have fewer losses if you take the time to understand and study these principles. I'm not telling you that it's going to happen overnight by watching just one video. Please don't, be misled like that. I would never say that. And it's not just as easy or as simple as some of these guys on YouTube make it seem, where they say, just draw a little trend line breaks and use a 618 and some candlestick patterns. Yeah, sometimes it works and sometimes it doesn't, but it works a hell of a lot better when you're doing it like this, when you understand these principles, as I showed you here. And I can go chart after chart after chart showing this. It's not that I'm cherry picking at all. This is what I do and what I look for and what I want you to look for. And you'll be able to do this. I say this all the time. The world's greatest traders in history have been trading like this. And they did it long before computers were around, and they were doing it by hand creating their charts. They understood the relation of supply and demand. They watched the ticker tape. They watched volume levels, and they watched price. And they recorded everything, and they were able to pick the precise spots where smart money was acquiring or distributing so that they could get into the trades and trade alongside with them. That's exactly what Wyckoff did. I want you to trade like Wyckoff. Think like Wyckoff. Be a smart money trader. You can do this. If you've got any questions about what I talk about today here in this video, in this presentation, please send me an email. I'd be more than happy to elaborate and make another video, which might even help everybody else in the group. Thanks for watching.